Welcome to Yellow Tunnel and Bar Chart. My name is Mark Karpel. I'm CEO and founder of Yellow Tunnel. And today we're going to talk about current market conditions and JP Morgan earnings. We're going to use bar chart tools. So that's we're building this videos together with the collaboration from Bar Chart. For those of you who are new, welcome. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express, working with Bar Chart, building the new tools and technology, and on Yellow Tunnel, using these tools to generate signals and trade. And this, I've been doing it for over 25 years. Since I'm using Bar Chart tools, so I'm going to put both disclaimers. I encourage you to pause the screen if you need more time to read the Bar Chart disclosures. They're very important. If this is the first time you see them, so pause if you need more time. And same thing, disclosures for Yellow Tunnel. I'm going to go through specific trade ideas and trade signals using bar chart tools. So it's very important to understand the risk associated with trading stock or options. All right, let's start. Now the disclaimers are out of the way. I'm looking at the earnings power trader. JP Morgan announcing earnings on Friday, kind of kicking off the earnings season, Delta Airlines. So going into the event, the long-term trend is we're still in a bullish uptrend and potentially reaching 600 level in the next few months. October is usually volatile, especially going into the earnings. So I do expect short-term pullback, but we're continuing to make new highs going into the earnings season. There's still risk with the geopolitical risk in the Middle East. And CPI data tomorrow. But the model basically shows that the uptrend continues, potentially reaching 580 this week. If you look at the spiders chart, today we've made incremental new highs. We're staying above 50-day moving average. If you look at the gamma exposure, we do have a pretty large position at 550, 567. We can actually see that here using the spiders. So these are the gamma exposure and high concentration of the open interest. And you can see high in terms of gamma exposure, 560 is pretty well positioned and overhead resistance is 580. And if you look at the expected move, we do need to clear 580 before going higher. Model doesn't see implied volatility doesn't show that we could breach that level 580. On the downside surprise, there's not a lot of positioning up until 560 level, 560 and then 570. Those are your key support and resistance looking at the spiders gamma exposure. I would also look at the interest rates. 10-year yield is at 4.06%. So we have pretty sharp rebound in 10-year yield from oversold conditions. We do have a CPI data, and that will make a move in the interest sensitive sector as well. We've seen materials, China in play, where you have a kind of this gamma squeeze, elevator up, elevator down on worse than expected stimulus package from China and unprecedented volume. So it's another thing to watch from macroeconomic conditions. Again, tomorrow CPI data, and Delta Airlines will announce earnings Thursday. That can also spark volatility. Going into the I actually placed Delta Airlines for tomorrow, but we're going to talk about JP Morgan. Right? We're going to talk about JP Morgan earnings. So earnings on Friday, we just recovered the 50-day moving average again. Looking at the gamma exposure. Let's switch to Delta Airlines. To JP Morgan. You can see, I'm looking at the gamma exposure, right? High concentration of open interest where kind of bulls and bears meet, or dealers and everyone else meet, and you have the highest open interest is at 220 strikes. You also gamma exposure and 230. So if you look at the estimated move, looking at the October expirations this week, this Friday, next week, highest concentration is at 220. So one way to take advantage of that information is to select use the long call butterfly, right? So you can use long call butterfly, select 220 strike where there is a high concentration, and you can structure these trades where if you do, let's say 215, 220, 225 butterfly, directional butterfly, you are risking $1 to make $1.14 to make $4. So your payout is 3.3 to 1. probability of success or profit of 25%. And if you want to increase your probability, then you would have to come closer to where the stock is trading, but then your payout will also decrease. So it's a question is return on capital versus probability of success. But if you do look at the gamma exposure and high concentration, if there's a positive surprise, you could see the based on implied volatility, if they guide higher, we could see the stock at 220, 225 range. If there's a downward surprise, it's equally distributed based on the estimated move analysis that shows 3 to 4% move, potentially reaching 205 level. And 205 level would be close to 200-day moving average, 2 standard deviation moves. So pretty large pullback to the downside, revisiting September lows. And looking at the estimated move analysis, looking at October 18 expiration and October 11 expiration, again, model sees based on implied volatility, demand and supply for put out of the money puts and calls, about 3% move for the JP Morgan, which is close to the all-time highs, right? If it does move to 1 standard deviation, this is closer to 1 standard deviation. We could revisit the recent highs or all-time highs around 224 level, or on the downside, probably reaching the September 13 low, which is the 204 level. Again, low boundary for the expected move based on the supply and demand for the out-of-the-money option using estimated move analysis and the chart, bar chart. So those are the trades. You can structure them either butterflies that gives you allows you to participate in relatively expensive stocks like JP Morgan, but with limited downside, right? You know, if you put this butterfly, the maximum loss is $1.14, right? And the maximum gain is 3, and so on and so forth. So that would be a type of trades we do on Yellow Tunnel. You can use bar chart tools to analyze, right? The hardest part is to find the strike price, which can use as a magnet to gravitate after the earnings or any events for that matter. And we're gonna talk about this at length on Monday. So next webinar on Monday, 7 p.m., please join us. We're gonna talk about how to build your portfolio, opportunities in the market, signals, macroeconomic conditions, and how to take advantage of the current market volatility. Thank you very much and have a great day. Thank you.